Hello dear student, I am Dr. Boraste from Department of Commerce, KTHM College, Nasik. Today I am going to discuss with you another example of piecemeal distribution of cash, which is practical example number 6, in which we are going to study how general reserve or reserve fund to be added in partners capital from the surplus capital point of view. Further, we are going to see how bank loan, that is secured loan, creditors and partners loan, it has to be paid in surplus capital method under piecemeal distribution of cash. So let us start with our example number 6. Here is the example number 6 of piecemeal distribution of cash under surplus capital method. Problem number 6. Messrs A, B and C were partners sharing profit and losses in the ratio of 5:3:2 on 31st December 2018 when their balance sheet was as follows. Balance sheet is given. Balance sheet as on 31st December 2019. On the liability side, we have a liability including capital, general reserve fund, bank loan, creditors, Mrs. A's loan. And on the asset side, there are various assets including goodwill, furniture, land, book debts, cash and debtors. So, after this balance sheet, we have some adjustment. The firm dissolved on 1st January 2019 and the assets realized gradually as follows. Here we have a date of 2019, 15 January, 24th Feb, 7th March, 30th April, and we have a realization of land sold for rupees 14 land. The selling of land we got 40,000 in January, 20,000 in February, 7th March we got 20,000 and on 30th April we got 20,000. In this way we got various realization. After that we have some additional information, that is a sum of rupees 2,500 was kept reserved for meeting realization expenses and actual expenses of rupees 2,000 were met finally on 30th April 2020. It simply means that on the very first day we have made a reserve for rupees 2,500 for mitigation of the uh, realization expenses. However, the actual expenses was rupees only 2,000. It simply means that we have an excess reserve of rupees 500 which is to be used in April 2019 and it will be added in our cash. You are required to show the distribution of cash on basis of quotient method, that is nothing but highest relative capital method or surplus capital method. So here we have to solve this example under surplus capital method. We have a capital of A, B and C. With this we have one different thing, that is general reserve fund. So what is this general reserve fund? General reserve fund is nothing but reserve or any kind of reserve. It has to be added in capital. There may be a general reserve fund, only reserve fund, only profit and loss, whatever it may be, we have to add in the capital balances. So here we have to add this general reserve and distribute within among the partners as per their profit sharing ratio. Now just start our surplus capital statement. So let us start surplus capital. What is surplus capital? Surplus capital is nothing but we have to find out partners who have been paid an extra amount, or we can say extra capital to the partnership firm. It is called as surplus capital, and first of all we have to pay to that particular partner, that is additional amount. So here just draw an 5-column statement, that is statement of surplus capital, serial number, particulars, capital of A, B and C. Now start with the balances as per balance sheet. So capital balances as per balance sheet was 70,000, 57,000 and 13,000, which are given over here, that is 70, 57 and 13. For this purpose you can take a screenshot of this problem, or you may write down it in your notebook, so it will be help you to to solve this example. Okay, the next step is we have to add the capital. We have to add the general reserve as per profit sharing ratio in capital. Here you can see the general reserve fund is 10,000, so it has to be added in capital because the real owner of the general reserve or reserve fund or profit and loss account, which given on the liability side, all only reserve, it has to be added in the partner's capital because the real owner of this amount are partners. So here we have distributed 10,000 into 3 partners in the ratio of 5:3:2. So it comes to 5,000, 3,000 and 2,000. It's very easy. You can calculate here this sum which is issued or which is added in the partner's capital. Here the sum of general reserve fund is 10,000. So here just equal to 10,000 into 5 divided by 10. So balance is 5,000. That means answer is 5,000. That means we have to add 5,000 to Mr. A. Then the 3 part is given to Mr. B. So into 3 divided by 10 and into 2 divided by 10. The answer is 5,000, 3,000 and 2,000. You can use the calculator as it is allowed for your examination also. So we got adjusted capital. Adjusted capital means what? Balance as per balance sheet plus general reserve or reserve fund, that is added in capital. So after the adding of general reserve fund, we got the adjusted capital, that is 75,000, 60,000 and 15,000. So it is very simple. We have added some amount, that is general reserve in capital. After that, we have to calculate the proportion unit capital. For calculating the unit capital, we have to consider the profit sharing ratio. Here the profit sharing ratio is 5:3:2, which is given in example 5:3:2. For solution purpose, you may take a screenshot of this example or you may write down this example in your notebook. Okay, now we got a profit sharing ratio 5:3:2. Unit capital is what? Unit capital is adjusted capital divided by profit sharing ratio. So 75,000 divided by 5, balance will be 15,000. That means 75,000 divided by 5, 15,000. 60,000 divided by 3, 20,000. And 15,000 divided by 2, 7,500. So this is our unit capital. After unit capital, we have to consider the least amount, which is less amount, that is which is least amount of unit capital. It is to be considered as a base. So here I have made a red color correction in 7,500. So you can see here the 15,000, 20,000 and 7,500. The least amount is 7,500. So we are going to consider this amount as an base capital for calculating the proportionate capital. So the equation of proportionate capital is base capital into profit sharing ratio. So 7,500 into 5, answer is 37,500. You can calculate here 7,500 into 5. The answer is 37,500. That means proportionate capital of Mr. A is 37,500 and proportionate capital of Mr. B is 37,500 into 7,500 into 3. The answer is 22,500. Here you can see 22,500 and 7,500, that is 7,500 into 2 equals to 15,000. So answer is very easy. We got proportionate capital. After getting the proportionate capital, we can calculate the surplus capital. Surplus capital is what? Surplus capital is nothing but adjusted capital or capital. Here we got adjusted capital. So adjusted capital minus proportionate capital. So 75,000 minus 37,500. We got answer 37,500. That is surplus capital of Mr. A. Then in case of Mr. B, 60,000 minus 22,500. The answer is 37,500. That means we got surplus capital of rupees 37,500 of Mr. A and 37,500 of Mr. B. In this way, we can calculate absolute surplus. Here we got surplus of A and B, but we have to calculate absolute surplus. So profit sharing ratio. Here profit sharing ratio is 5:3:2. Again we have to repeat all the stages over here. So 37,500 divided by 5. So answer will be unit capital, that is 7,500, and 37,500 divided by 3, answer is 12,500. That means we got unit capital after the division of surplus capital by profit sharing ratio. After that we have to repeat all the stages. Here we have to calculate the proportionate capital. So here proportionate capital is what? Base capital into profit sharing ratio. We have a base capital. How we can calculate base capital, or what amount should we consider as the base capital? It's simply the least amount is considered as base capital. So 7,500 is base capital into 5, answer is 37,500, and 7,500 into 3, answer is 12,500. So 7,500 into 5, answer is 37,500, and 7,500 into 3, answer is 22,500. So we got proportionate capital. After getting proportionate capital, we can calculate absolute surplus capital. So absolute surplus capital is nothing but surplus capital minus proportionate capital. Here is the answer. surplus capital, that we have got the surplus of Mr. B, it simply means that we provide 15,000 as an extra amount to the partnership firm, and Mr. A is given extra amount 37,500 over Mr. B, that is 37,500. Here we have to deduct the amount from the earlier surplus, that is absolute surplus. So after getting this, we can calculate the priority of payment. What is priority of payment? Priority of payment is nothing but the payment the person who is liable to receive earlier in the liability sheet. So here you can see the priority of payment. First one is general reserve for realization expenses. Here you can see one thing is mentioned, that a sum of rupees 2,500 was kept reserved for meeting realization expenses. That's why we are making provision of rupees 2,500 for realization expenses. As you know, the in first lecture I have already explained that the priority of payment, general reserve have a right over all the liabilities. So first of all we have to pay general realization expenses. After the realization expenses, we can pay a third party liability. In our example, third party liabilities, bank loan and creditors, Mrs. A. These are three third party liabilities, but we have to pay first of all bank loan, that is secured, and after that we can pay creditors. And Mrs. A is here partner's wife is given a loan to our partnership firm, so she is a third party from the partnership point of view. So we will pay third party liability, that is first of all we will pay secured loan, that is bank loan, which is 5,000. After payment of secured loan or bank loan, we can pay unsecured liabilities, that is here we have two liability. First one is creditor and second one is Mrs. A's loan. So we have to pay this liability together because these both liabilities are unsecured liabilities, and we have to pay it in the pro rata basis, that is 3:2. Their liability ratio is here. So we have to pay all this liability. After payment of this liability, we can pay surplus of Mr. B, and after payment of surplus B, we can pay surplus of A and B, that is 37,500 and 37,500 of B. So here the amount is same, but already in the earlier stage 15,000 have been paid to Mr. B as absolute surplus. So we have to deduct that amount, and after the deduction of that amount we got 22,500. That means in this stage Mr. A will get 37,500 and Mr. B will get 22,500. After the payment of all these liabilities and absolute surplus, then surplus, we can pay surplus capital. So we can pay all cash or all balances in profit sharing ratio. So here the priority of payment. After the priority of payment, we have to consider the realization, what amount we have received. So here I have made one statement. You can draw it in your notebook, that actual realization is here. So it is nothing but the addition of all these assets which have been sold in the market and got the money for realization purpose. So 40,000 in plus 10,000 plus 2,500 plus 10,000, the total is 62,500. In this way, all the realization have been clear. Okay, now we have to prepare a statement showing piecemeal distribution of cash. For piecemeal distribution of cash, first of all we have to consider the columns. First one is debt, which is fixed. Second one is particular. The column is fixed in each and every example. Then available cash, it is also fixed. Then total liability is also fixed column. So first four columns are fixed: debt, then particulars, then available cash, and total liabilities. After this, we can prepare the statement, or we can made an extra column as per the liability in your example. So here we have a liability of bank loan. So first column becomes bank loan, which is secured. Then creditors, then Mrs. A's loan. So here creditors and Mrs. A's loan, and after that we can pay amount to capital of A, B and C. So let us start the solution. First of all, we will mention one balance which is called as balance as per balance sheet. So here we got a balance as per balance sheet, that is cash is 15,000. Here you can see available cash is 15,000. After cash, we have another column which is an extra column of total liability. Later on I will discuss about the total liability column, why it is mentioned over here. Then secured loan, that is bank loan 5,000. Then creditors 1,02,000, Mrs. A loan 68,000 and capital balances are 70,000 plus 57,000 plus 13,000. After the balances as per balance sheet, we have to add general reserve. As all earlier already explained that general reserve, reserve fund, general reserve fund, only reserve or profit and loss account which is given on the liability side of any partnership firm, we have to add that balance in the partner's capital. So here I am going to adding the general reserve fund in partners capital. So add general reserve in their profit sharing ratio, that is 5:3:2. So 70,000 plus 5,000, 57,000 plus 3,000 and 13,000 plus 2,000. We got adjusted capital as same in the which was same in the surplus capital statement, that is 75,000, 60,000 and 50,000. Here you can see the adjusted capital, that is 75,000 plus 60,000 plus 15,000. Here you can see the adjusted capital. So that is nothing but balance after adding the general reserve fund. So here we have a balance of rupees 50,000 cash. Total liability also increased by 10,000, that is 3,25,000. Total liability is what? Total liability is a total of bank loan, creditors, Mrs. A's loan, then all partners capital. So that is nothing but the total of all the liabilities, 3,25,000 we have to pay. Okay, now just go to priority of payment. First of all, we will pay realization expenses reserve, which is first priority, and we have to pay to that realization expenses, or we have to keep reserve for realization expenses. So here realization expenses reserve 2,500. Our cash was 15,000 minus 2,500. We have still balance of rupees 12,500. Other liabilities will not reduce because it is just a reserve. It is not actual expenses, or it is not actual payment to the any kind of liability holder. After that, we can pay a bank loan, which is a second priority in a third party liability, that is secured liability. Bank loan secured is 5,000. So 5,000 amount will be deducted from the total cash and total liability as well as from bank loan. So 5,000 will be deducted. After deducting 5,000, we have a balance of rupees 7,500 of cash and 3,20,000 of total liability, while our bank loan is completely nil. That means we have already paid the amount to bank loan which was secured for rupees 5,000. So now we have a balance of 7,500. After the payment of bank loan, next priority is unsecured liability, that is creditors and Mrs. A's loan. Creditors amount is 1,02,000 and Mrs. A's loan amount is 68,000. So total of these two is 1,70,000. If we don't have 1,70,000 at that time, we have to use the pro rata ratio, that is 3:2. That is the ratio of 1:2:68. It will decrease by, and it shows that there is a ratio of 3:2. So here we have 7,500 and we have to pay Mrs. A's loan and creditors as per their liability ratio, that is 3:2. So cash is reduced by 7,500, total liability is reduced by 7,500, and creditors will get 4,500 and Mrs. A's loan will get by 3,000. This is nothing but the distribution of 7,500 among the creditors and Mrs. A's loan in the ratio of 3:2. So in our hand balance again nil, cash is nil, total liability is reduced to 3,12,500, and still creditors have to pay 97, have to receive 97,500 and 65,000 of Mrs. A's loan. So we can call our first realization, which is on 15th of January, that is 62,500. You can see here the realization amount, that is in realization column. First realization, that is 62,500. So here we got the realization of 62,500. First of all, we have to pay the amount to the creditors and Mrs. A's loan as their balances are due. Here again we have a shortfall of some amount, that is we have to pay 97,500 plus 65,000. That means we have to pay 1,62,500, but we have only 62,500. That means we have a shortfall of 1 lakh. Still we have to pay 62,500 to creditors and Mrs. A's loan. So in the next step, let's pay to creditors and Mrs. A's loan, that is 62,000 in the ratio of 3:2. So total amount will be reduced by 62,500. Creditors will get 37,500 and Mrs. A's loan will get 25,000. That means we have distributed the liability in the profit sharing ratio. You can see here the calculation that is equal to 62,500 into 3 divided by 5. So answer is 37,500. In the same way, you can calculate the profit. You can calculate another amount, that is Mrs. A's loan amount is 25,000. So okay, now our cash balance is 0 and our total liability is still payable 2,50,000. Our second realization is now we have amount of 0, so we can call our second realization, which is second realization is 51,000. So call for second realization 51,000. Here again we have to pay Miss Creditors and Mrs. A's loan of rupees 1 lakh, but we have in our hand only 51,000. So we can pay 51,000 to Miss Creditors and Mrs. A's loan. So less amount 51,000, total liability will be reduced by 51,000 and creditors will get 51,000 into 3 divided by 5. So here you can see creditors will get 30,600 and Mrs. A's loan will get 20,400. After the payment of this second realization, we again have a nil amount, that is we don't have a cash of rupees. Then we have a liability of 1,99,000 and the balance of creditors and Mrs. A's loan is still payable. So that is 29,400 and 19,600. So our cash is nil. So call third realization. Third realization on 7th March, which is of 1,18,000. So third realization amount rupees 1,18,000. Now we have to pay 49,000 to creditors and Mrs. A's loan. That is payable to creditors and Mrs. A's loan 49,000. As we have already paid 62,000 in first step, 51,000 in second step, and the total amount payable to creditors and Mrs. A's loan is 1,70,000. Here we have already paid and still 49,000 is payable. So you can pay creditors and Mrs. A's loan 49,000. Total liability will be reduced by 49,000. Creditors will get 29,400 and Mrs. A's loan, that is Mrs. A, will get 19,000. After the payment of 49,000, we have an amount of rupees 69,000. Total liability is still payable 1,50,000. Creditors are nil and Mrs. A's loan is nil. After the payment of this, that is third party liability, are paid. Then in a priority of payment, we have another payment, or we have to pay absolute surplus capital of Mr. B. So here we have 69,000, we can pay 15,000. So let's pay to Mr. B absolute surplus, that is 15,000. Total liability will be reduced by 15,000 and Mr. B will receive 50,000. So he is getting 15,000. After receiving of 15,000, the balance of Mr. B is 45,000, while Mr. C's balance is as it is and Mr. A's balance is also as it is. So here you can see balance in our hand, cash is still available with us 54,000, total liabilities payable 1,35,000, capital of Mr. A is 75, B is 45 and C's capital balance is 15,000. So after the payment of absolute surplus, we can pay surplus capital. Here you can see in the priority of payment, surplus capital. Surplus capital payment is 37,500 to A and 37,500 to B. But in an earlier step, we have already paid 15,000 to Mr. B. That is 37 out of 37,000. Mr. B is already received 15,000. That means he is have a right to receivable only 22,500. So Mr. A will receive 37,500 and Mr. B will receive 22,500. It simply means that in this step we must have at least 60,000. If we don't have 60,000, then we have to use the profit sharing ratio, that is 5:3, or you can calculate the liability ratio also. So here we don't have 60,000, we have only 54,000. So we can issue 54,000. So let's pay to Mr. A and Mr. B surplus capital 54,000. So total liability will be reduced by 54,000. Amount of rupees 30, Mr. A will get equal to, we can calculate here 54,000 into 5 divided by 8. That means Mr. A will get 33,750. In the same way, Mr. B will get 2 shares. So 54,000 into 2 divided by 8. 54,000 divided by 54,000 into 2 divided by 5 plus into 3. 54,000 into 3 divided by 8, that is 20,250. So here you can see the calculation of Mr. A and B. Now again our balance is nil, and still we have to pay 81,000 as total liability. Here you can cross check the total of total liabilities, that is capital 41,250 plus 24,750 plus 15,000. The total is 81,000. Still we have to pay 81,000. In absolute surplus capital we have paid only 54,000. Still we have to pay 6,000 to Mr. A and B. Now we can call our next realization, that is realization number 4, that is 42,000, that is last fourth and final realization of rupees 42,000. In this stage you can consider you have to consider the realization expenses which were met the reserve for rupees 2,500 in the month of April. Actual realization expenses was rupees 2,000. That means here we have an extra amount of rupees 500. So here you can see utilize reserve for realization expenses or utilization of reserve for realization expenses. Provision was rupees made for 2,000. Actual expenses was provision was made for 2,500. Actual expenses was 2,000, and we have unused reserve, that is unused reserve rupees 500. So 500 has to be added in the available cash. So 42,000 plus 500 equal to 42,500. We have now an amount of rupees 42,500. After that we have to pay absolute surplus capital, absolute surplus or surplus already paid, surplus capital to Mr. A and B. So we have here paid 54,000. Still 6,000 is payable. As you can see here, the total is rupees 60,000. Out of 60,000 we have paid 54,000. That means still we have to pay 6,000 to Mr. A and B. So less paid to Mr. A and B surplus capital, that is 5:3. 6,000 total cash will be reduced and 6,000 total liability will be reduced. So after that Mr. A will get 3,750 and Mr. B will receive 2,250. So surplus is paid. Now we have a balance of rupees 36,500 and total liability is 75,000. So after the payment of surplus, we can pay all the amounts to Mr. A, B and C in their profit sharing ratio, that is 5:3:2. And here we have 36,500. We can pay 36,500 to A, B and C in the ratio of 5:3:2. So less 36,500 total liability will be reduced by 36,500. Mr. A will get 18,250. So here you can calculate 36,500 into 5 divided by 10. That means 18,250 will be received by Mr. A. In the same way Mr. B will receive 3 shares. So just multiply by 3. Answer will be 10,950. And Mr. C will receive 2 shares, that is into 2. So amount is 7,300. In this way we can issue the cash balances to partners in the profit sharing ratio, and after the payment of all the liability, then absolute capital and then a surplus capital and all the balances in the profit sharing ratio to all the partners, still we have a liability of 38,500. That means we are unable to pay this 38,500, and you can cross check that amount by adding the balance capital of A, B and C. Here you can see the total of rupees 38,500. That means Mr. A bear 19,250 as a realization loss, Mr. B bear 11,550 and Mr. C bear 7,700 as a realization loss. So the total of this realization loss equal to your total liability. As I earlier said that total liability column is important. It is from this point of view that you can cross check your total realization loss into total liability. That means the liability which is unpaid, it must be equal to your realization loss, and if it is not, then there is some problem or there is some mistake. So in this way we can calculate the realization loss, and you can prepare a statement of piecemeal distribution of cash as per surplus capital method. With this I would like to say thank you very much. In the next example we will discuss about various kind of liabilities and assets to which we can pay the amount to the partners, then various liabilities, that is income tax, then other liability also. So with this I would like to say thank you very much.